Do you have to pay federal income tax on your Social Security income? The answer is a bit complicated, but no worries. Aspire to Money is here to help on all things related to you and your money. You definitely want to know this information so that you aren't in for a rude surprise when you retire. IRS Publication 915 has the details. First, you have to figure out what the IRS calls your base amount. This varies by your filing status. For the 2018 tax year, the base amount is $25,000 if you are single, head of household, or qualifying widow or widower. Tip: please check out the first video in ATM's three-part series on the Form 1040 for a detailed explanation of the IRS definition of head of household. The base amount is $32,000 if you are married filing jointly for tax year 2018. Okay, so then the IRS tells you to fill out Worksheet A on page 4 of Publication 915. They say this is a quick way to figure out what amount of your Social Security income is taxable. Tip: please subscribe to the Aspire to Money mailing list for more great money information. Just send an email request to info@aspiretomoney.com. Back to Worksheet A. Worksheet A essentially tells you to add together 50% of your Social Security income plus all your other income, including tax-exempt interest. If this amount from Worksheet A is greater than the base amount for your filing status, either $25,000 or $32,000, then some of your Social Security income is likely to be taxable. Single, head of household, widowed filers with a combined income of $25,000 to $34,000 must pay federal income taxes on up to 50% of their Social Security income. Above $34,000, you must pay federal income taxes on up to 85% of Social Security income. Married couples filing jointly with a combined income of $32,000 to $44,000 must pay federal income taxes on up to 50% of their Social Security income. Above $44,000, they must pay federal income taxes on up to 85% of Social Security income. Let's take a look at an example Worksheet A for taxpayer Ben. You record your total Social Security income on line A. Ben has $10,000 in Social Security income, so he enters this amount on line A. That amount is then multiplied by 0.5 to get $5,000. Ben records that amount on line B. On line C, you enter the total of all your other income. Ben records $26,900. Tip: don't reduce the income for line C by any deductions, exemptions, etc. The IRS doesn't allow that for this purpose. On line D, you enter any tax-exempt interest, such as from municipal bonds. Ben doesn't have any such interest, so he enters 0. Finally, you add up lines B, C, and D and enter the amount on line E. Ben records $31,900. Line E is what the IRS defines as your retirement income. This is another example of IRS lingo. Tip: the good news is that you don't have to record withdrawals from a Roth IRA as part of that income. So the Roth IRA is a great way to increase your retirement income without increasing your taxes in retirement. Back to Ben. Ben is single and his retirement income is $31,900. As defined by the IRS, Ben's retirement income falls between $25,000 and $34,000. So Ben will owe federal income taxes on 50% of his Social Security income. Since part of Ben's Social Security income is taxable, he must file a Form 1040. On the 1040, Ben will record his total Social Security income from Box 5 of his Form SSA 1099. He will record this on line 5A. Ben will record the taxable portion on line 5B. In the instructions for the Form 1040, available at www.irs.gov, there is also a worksheet you can use to figure your taxable Social Security amount. To avoid owing a penalty, Ben will need to either 1. Have taxes withheld from his Social Security payments, or 2. Pay quarterly estimated taxes. Ben decides to have the taxes withheld from the Social Security payments, so he fills out Form W4V to do that. Okay, we've gone through the bad news about federal income taxes on Social Security, but what about state income taxes? Yikes! 13 states collect taxes on at least some Social Security income for tax year 2018. Those states in alphabetical order are Colorado, Connecticut, Kansas, Minnesota, Missouri, Montana, Nebraska, New Mexico, North Dakota, Rhode Island, Utah, Vermont, and West Virginia. The other 37 states, as well as the District of Columbia, do not tax Social Security income. Please like, share, and subscribe to the Aspire to Money channel.